Literally just a couple of days ago, I made a video talking about how there's 5 major reasons why people can't pay their bills. And if you want to check that out, this is the video. But I wish I would have known this latest information about the credit card debt crisis in America before I made that video, because it would have been great to include in there. So I figured I'll just make this one instead. Because right now we have a situation that just continues to develop and continues to get worse. And what's happening is Americans in general are literally living off their credit cards right now. I know that sounds dramatic, but that is the case for a lot of people right now. Because a new report just came out on credit card debt, talking about how Americans are spending more and more on credit cards and carrying bigger and bigger balances month to month. This is a growing and really a worrisome trend. JP Chase, which is the biggest US bank, said in its most recent quarterly report that it saw higher revolving credit card balances, which is the amount that people do not pay off monthly. Capital One, they also came out this week and said that the proportion of people making the minimum payments is now above pre-pandemic levels. And they're saying this is not just low-income people, this is not just people with bad credit, this is across the board, pretty much across everybody who has a credit card. Take a look at this chart from the Federal Reserve Bank of Philadelphia going all the way back to 2013 that shows you the revolving credit card balances from then until today. The number has completely skyrocketed, guys. It looked promising during the pandemic years when it came crashing down because people did actually have extra money for a little while and use some of that money to pay off the credit card debt. But as we can see, that was very short-lived, and the debt has skyrocketed since then. The amount of money that people are carrying on these cards is just unbelievable. So you have a situation right now where the balances continue to climb at an alarming rate. People making the minimum payments continues to climb at an alarming rate. At the same time, interest rates are 25-30% on credit cards right now. And what happened was during the pandemic, credit card companies made it easier for people to access credit, guys, and now it is coming back and backfiring because this leads to more people getting access to credit that shouldn't have it, and we get a situation like this where the numbers just completely explode through the roof. Like, one of the most common complaints I get when I make these videos about how bad the economy is, like, whoa, I see all the restaurants busy near me, how come I see everybody driving a brand new car? This is it right here. That graph you just saw, that's paying for probably 75% of that stuff. And also that graph reflects, how hard it is to keep up with the cost of living today. You can check out this chart here that shows you how the amount of people that are just making the minimum payments on their credit cards is also steadily increasing. Meanwhile, these credit card companies are having record financial years because, think about it, they're charging almost all-time high interest rates on these credit cards. The balances are at all-time highs. More and more people paying the minimum payment. These guys are raking in the dough. The credit card companies couldn't be more thrilled with this situation right now. We also have credit card delinquencies continue to rise. JP said that 2.17% of accounts had balances that were more than 30 days past due in the fourth quarter, which was up from 2.14% in the prior quarter. You also have customers with accounts 90 days past due going up as well. So this is a growing trend that people just are charging more, taking longer to pay, or just not paying at all. These banks are also reporting increases in their net charge-offs, which are basically balances that they don't expect to ever recover. They know that these people are deadbeats, they're not going to pay, and they write it off and they send it to collections. That's it. Personally, I'm pretty interested to see how long this show can go on for, because one thing we know for sure is that a lot of people have these credit cards, but once you get past a certain balance, your credit score dips considerably, and it's going to be near impossible to get an additional credit card to keep, racking up more and more debt. And eventually you get stuck with the cards you have, and if your balances are all maxed out, your spending power comes to an end. I feel like we're going to be getting close to that point within the next couple of years, but maybe not. Who knows? I'm not sitting here claiming I know what's going to happen, but I am interested to see how this is all going to play out for people. But one of the last things you want happening is somebody making these charges in your name fraudulently. And that's why today's video is sponsored by Delete Me. Delete Me is a hands-free subscription service that will remove your personal information that's being sold online. Delete Me's privacy experts also remove you from hundreds of data brokers all year long on a continuous basis. Your information is out there on so many different websites, especially if you're somebody who's been applying for a job over the past few months with dozens or even hundreds of different companies, and that data is being stored on their servers and possibly being sold to data brokers without your permission. They might have things like your name, your address, your marital status, your past addresses, your relatives info, court information. It's really crazy the amount of stuff that they have, plus all the additional information that you give them. So if you want to take back your internet privacy, I highly recommend Delete Me. Make sure you sign up and get 20% off your Delete Me subscription by joining today using my link down in the description below at joindeleteme.com/boardinarrow, or you can use the QR code on the screen. Now, like we talked about in my video on why people are having such a hard time paying their bills right now, a lot of it has to do with the increased cost of living across the board with everything. And one of these things that we're seeing right now that everyone is getting hit by is increased car insurance premiums. This is something that continues to rise at an even faster rate than homeowners insurance premiums. Right now, the average car insurance premium over the past year rose 12.7% as of November of 2024, guys. And the average annual cost for car insurance now in 2025 is going to be about $2,100 per year. That's pretty insane. Although when I think about it, that's pretty much on par with what I pay. I think I pay slightly more than that to insure both cars, my Jeep and my Camaro. And of course, there's a whole host of reasons of why this is happening, but one of them is obviously that these cars are becoming more expensive to repair. You know, the parts required for newer cars are very expensive. You know, there's a lot of safety equipment, sensors and cameras. All this stuff costs a lot of money. So if there's an accident, you know, it's not just a matter of replacing a bumper. It's replacing the bumper and the sensors that were in it, and the rear backup camera, and all the other stuff and all the other gadgets that the car has. On top of that, you have the labor, the people who are fixing these cars and repairing them. The price of that is going up as well. You have the actual parts themselves costing more due to inflation. So the insurance companies have to pay these higher prices on everything every time there is an accident. They also say there's an uptick in risky driving. There's been more accidents in recent years. In 2022, 42,514 people died in auto accidents in the US, which is a 10% increase compared to 2020. Riskier driving means higher insurance premiums for everybody. And that explains why insurance is so high here in Miami, because that's all you ever see around here is risky driving. It's like unbelievable the amount of stunts and things people pull around here just to get like 3 seconds ahead of somebody, guys. It is truly insane. Then of course there's the rise in litigation, which is something that we've been seeing happen for a while now, but it's more prevalent than ever. You have more lawsuits hitting insurance companies, and that gets passed along to customers. You know, every time you see one of those ads on TV for a car accident attorney, or you see one of those billboards driving down the highway, you know, if you got injured, give us a call. Guess what? Those guys settle for big amounts from these insurance companies, and those big settlements or lawsuits translate to higher insurance premiums for everybody. Now, sometimes that money is well deserved, but a lot of times it's people just trying to take advantage of the system, guys. In fact, the last accident I was in here in Miami was exactly that. It was a fender bender. Definitely nobody was hurt. It was just me and this other lady. And as soon as she got out of the car, she called 911 and was pretending her neck was hurting, all this stuff, like for a very, very minor accident. Ambulance came, the whole 9 yards, picked her up, and she sued. She sued me, which obviously my insurance covered, and my insurance settled with her, and they did give her some money, but nowhere near the amount she was looking for. So you have that. That's also taking its toll on everybody's expenses, just like the rent and the food and the mortgage and the gas and everything else. And people who are not in great financial positions are always being hit with these ridiculous offers that seem tempting, and people take it out of desperation. Guys, if you're broke and you don't have a lot of money and you need money for something, or you want something and you don't have, you know, a very high financial IQ, you'd be tempted to take deals like this one. because what's happening now is more and more people with bad credit are looking at borrowing money against their car, guys. Just like taking a home equity loan or a home equity line of credit out on your house, people are now starting to do this with their car. So what this is it's a new type of credit card called Yendo. I don't know if anybody's ever heard of this, but I haven't heard of this till now. They say this is better because instead of getting a payday loan or taking out one of those kind of crazy loans, you can just get one of these loans from Yendo against your car. In exchange for the credit card, Yendo will put a lien on your vehicle. So basically, if you don't pay for any reason, they will take your car, just like when you get a home equity loan or a home equity line of credit. It's that simple. People are resorting to options like this to borrow against their assets. These are people that only have a car, that's it, nothing else. So they borrow against that and, toss a coin and hope that they're going to be able to just keep making the payments. So customers who sign up for this, they get 25 days after their monthly statement to make a minimum payment of either 1% of their debt or $50, whichever is greater. They say this is much better than all of the predatory loan alternatives out there, like all those payday loan places. Now, you could argue that's true from the standpoint that these guys aren't going to get hit with exorbitant interest rates, right? Just like those payday loan places, once you start taking those, it's almost impossible to pay them off. The problem is this sort of credit product is aimed at people that can't really afford to make the payment. So it's almost a guarantee at some point they may end up losing their car because they just can't make the payments. If you miss one or two, it's gone. But they say this is a great alternative to the payday loans and to the car title loans, where you can pay anywhere between 300 to 400% annual percentage rates on those loans. But they're claiming to be the heroes here and say, hey, we know there's a lot of people out there that are strapped for cash, so we're coming in here trying to solve this without charging people 300-400% interest and doing the whole payday loan scam. But here's the thing, guys, even when you take a payday loan, if you can't pay it, yeah, you're going to have damaged credit and you're going to have, financial responsibilities that you can't meet, but they're not going to come and take your car. And if your car is the way that you get to work and you feed your kids or whatever, it's kind of foolish to take out a loan on that. And really, depending on how much you're looking at borrowing against your car, you would almost be better off taking on credit card debt instead and taking the chance whether or not you can pay that off. Because either way, you're going to take a hit on your credit if you can't pay. But the difference is, at least if you can't pay the credit cards, they're not going to take your car. Just like they don't take your house if you just borrow against the credit cards instead of taking a home equity loan. But just the fact that things like this are happening right now, that these products are being invented and people are being offered things like this, shows you the state of affairs. It shows you what's happening in the real economy right now and how many people are truly hard up for cash. It's pretty disturbing. So next time you look around and you say, oh, this restaurant is full. What's Michael talking about? The parking lot here is full. Oh, the shopping carts here are full. Go back and look at the beginning of this video and see how high those credit card balances just continue to go up and how many people continue to make the minimum payments, and ask yourself, who's really paying for this? Because when you stop and think about it, you might actually be surprised and realize not everything is as it appears. These people don't really have the money that it looks like they have. Here we have a house for sale, which you can't really see because it is just completely blocked by these privacy hedges, but I promise you it's there. But we have to take a look at this because, check this out. This house was purchased back in 2017 for $3.1 million. And then it hit the market in 2021 for $6.3 million. And then earlier in 2024, about a year ago, they raised the price to almost $10 million, guys, trying to get triple from what this house was originally paid for just about 5-6 years ago. And the price has come down substantially since then. In fact, they have now lowered the price down to $6.5 million as of January of 2025. The amount of speculation on these prices never ceases to amaze me. So we just talked about how people are basically struggling financially and how everybody's using up the credit cards and people are borrowing money against their cars just to stay afloat right now. But what happens if you have the opposite problem? Because I saw this very interesting story today, which is a concern considering the world is rapidly moving towards cryptocurrency and online banking. There's even been talks about a CBDC for a while. moving away from cash and all of this, moving away from our traditional ways of managing money could have some unintended consequences, or maybe it is the intention, because take a look at this. There was a story of this guy who got a check for 6 figures, okay? Didn't say how much, but obviously it's over 100 grand. All he has is an online bank account, and he wasn't able to deposit the check with his mobile app. They wouldn't take a check that big with the mobile app, but since there's no physical locations of the bank, what are you supposed to do? And I think this is so interesting because I've always wondered about stuff like this myself, because I use online banking myself. In fact, I am just one bank away from being completely an online banker myself. And apparently so is 77% a lot of other people. 77% of consumers prefer to manage their banking online these days, which is no wonder considering how much time it saves, how convenient it is, especially when it comes to saving money. These online high interest savings accounts are a much better deal than anything you're going to find at a physical branch. So what are you supposed to do in this situation? Well, you can call your bank and ask, first of all, if they will make an exception. Say, hey, I had this large check. You can see my account is in good standing. Maybe you guys can make an exception this time so I can go ahead and deposit the check. You can see if that will work. If that doesn't work, then they may say, well, we can't do that, but you can go ahead and mail us the check and we'll deposit it for you like that. Now, I would be very scared to do this, especially with the amount of check fraud. I have had several checks lost in the mail and cashed and stolen over the years, to the point where I don't even mail checks anymore because of this. And if we're talking about a 6-figure check here that ends up in the wrong hands and is somehow mismanaged or stolen or cashed by somebody else, that can be devastating. And imagine the fight you'll have to go through to get this money back for yourself. So if none of those things work, then your only other option, unfortunately, might be to actually go and open up a bank account at a physical bank just to be able to deposit this check. And then, of course, once it clears, you can go ahead and transfer the funds to a different account, one of these online accounts or whatever. But it's crazy that it's coming to that. What you probably don't want to do is use one of those check cashing services, especially because they charge a fee based on the percentage of the amount you want to cash. So if you're talking a 6-figure check, these guys are going to walk away with a huge chunk of that just to cash the check for you. Now, obviously, this is a good problem to have. No one's denying that. If you have enough money where you need to deposit a check this large and you're having a hard time figuring out how to do it, not really feeling sorry for you. But the part to look at and pay attention with this is what happens if we get to a point where there are no more physical branches. You see a lot of these banks are actually closing down a lot of their branches due to the fact that people aren't using them anymore. They're not as popular. And why would you? These banks come with high fees, minimum balances that you have to carry in the account, no incentive to leave any money in the bank because you either have to have that minimum balance, or if you do have a higher balance, the savings rates are total garbage. So no one wants to use it, including me. But what happens if we get to a world where there are no physical bank accounts anymore, there are no physical branches? You receive large checks like this that you can't deposit online. What are we to do then? I hope that the online banks start recognizing this as a pretty important issue, especially if they want to remain, the viable option for many into the future. The only other thing I would suggest people do if you ever find yourself in a situation like this, just like when you have a real estate closing or something like that, see if whoever's sending you this large check can send you a wire transfer instead, or an ACH transfer directly to your bank account so you don't have to deal with the check, because the check part is what makes this problematic. Now, some banks do have daily deposit limits, like they won't let you deposit more than, $50,000 a day or something, or even per month. And if the check is $100,000, what are you to do then? So if you are expecting a big payment like this, just make sure you call the bank that you're planning on depositing it in first and see what can be done and what solutions are available to you so you don't run into any hiccups or headaches down the road. So if you enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.